Welcome to TradeTheNBI.com. This is John. This report is for the 3rd of September, and we continue the juggernaut. We're getting just a dramatic number of positive extremes, and every time we see some weakness in the steel, you're going to have to expect that you're going to see some broader variation in the market. At this particular point, we've been, every time we pull back towards the ABM yellow, we've reacted before even reaching it. So at some point, we're going to get that connection to it and maybe even a breach of it. We're still seeing rising gold, rising blue. Azure's fairly flat, but still we're within this monster move of shakeout. Just look at that NQ 30. That's not sustainable. We know it, but it can go on for a little bit of time. When we look at the euro, a little bit of a pullback into its range, and it's not surprising, but it's still well outside the general target range of these blue lines that we've had. And again, that's just going to fluctuate. There's still plenty of troubling signs coming out of the euro zone area to warrant a significant pullback of the euro, but this certainly helps some U.S. companies. The problem is you're just not having the commerce because you're not having the free mobility of people to move around. Oil taking a slight dip this particular point. Again, the longer this draws out, the harder it's going to become for them to maintain an artificial price valuation, as real market dynamics at a certain point are going to overwhelm even the manipulations. Because what we're seeing is a long-term effect. You can do it for a while, but here we are into many months, and at a certain point, you're going to have a hard time convincing everybody that things are going to remain status quo when it's just not viable. It's just already gone on far too long. Gold, again, is the hedge. You're going to see that move depending on how election interpretations take place and whether there's any major world events, which everything being equal, the world seems fairly quiet, surprisingly enough. So from the other day, we had the start of the run-up, all positive extremes, so we can even just put in the line of where that's going to eventually need a retrace, and we'll just go ahead and color it magenta. While we're here, we did end up with our break signals. Now this is an interesting one because you have this overbought. Yes, the yellow crossed below magenta, and the magenta finally faded below red just before we ended up with the full BK signal. And here, of course, you had the Power Mo 2 fading, but you had no subsequent rise, so you weren't expecting massive decline. But then again, you still had plenty of positive extremes, so it's definitely worth the play. What to me is interesting is when you look at some of these potential buy setups, and then I kind of marked it over here, you get the failures where you don't have that yellow having risen above the magenta at that particular point, and by the time it does, you're so late in the Power Mo reading here from a cross up and back below, you're right at the tail end of what it is. And of course, even there, you get cyan under red for just a brief moment before an immediate turnaround of everything. You get the green below, cyan moving above green, the orange shooting above steel, steel moving below cyan. Those are all things for a little bit more of an exacerbated move. And it did take us down to the 23%, all the way down to the 0 from the full retrace mode. But what I wanted to point out is the differential that you'll see in some of these signals. Like for instance, this where you have the dip below, looks like you have your cross with the little rising azure. The difference is that it takes place without, again, that yellow being over magenta, and then you move over across where you do have that crossover, and you get a much different take on what appears to be a very similar exact move from Power Mo, everything else, but highly delineated here from the shakeout configuration. It just kind of gives that clarity of it, and of course that led to the massive run-up that just continued all the way through the end of the day, and then a little bit of softening to fill in, and again, there's another set of positive extremes that can be marked for future rollout. Gotta go to that little higher one right there. Just like that. And this makes it easy because it sets up a whole variety of different levels. And again, this is where I would take this setup right here where you begin with that bar. And you just go ahead and come across right there. And those are the different segments, and that's just because we have a break in between. Yes, there's individual ones, but we like to look where there's a series of them have begun. Those can be a little bit more poignant. And then, of course, in the after hours session right now, we're caught right between this 71 and then all the way down to the 55, which would be this one here, and then, of course, that lower one from earlier in the day. So those are the ones I'd be looking at. Definitely right now we're seeing potential for lower with this dip below the red line, and it's continuing. So we'll see if that plays out. That wouldn't be a surprise. I mean, it's been quite a dramatic move. I mean, we're close in getting near 36. You know, this has been, we thought back in 2008, 2009, those runs when we got into 2010, 11 were incredible, but this makes all of that look trivial. Fantastic times to be alive. As always, though, trade well. I'll put anything relevant on the Skype chat. We'll talk again later.